Hello and welcome everyone to this weekly market recap for the week ending Thursday, October 31st, 2024. I'm Tom Bowley, Chief Market Strategist here at EarningsBeats, and it's a pleasure to be with you again this Thursday. Happy Halloween, everybody. I'm actually looking at the stock market trying to figure out if this is a trick or a treat or both. With the market pulling back today and the volatility index rising, the VIX has hit a pretty key level today, reaching highs that we've recently seen just over the last few months. And of course, when the VIX tops, that's usually when the stock market bottoms. So we've been getting a little bit of selling here in the near term, but is the VIX topping today? And I'll show you a chart or two a little bit later in the show that I think you can kind of watch to see how we finish out today and next few days and see if that VIX resistance level holds. But again, we'll talk about that more in just a little bit. We had another good jobs report out yesterday. Was the ADP employment report, came in better than expected. And of course, the last jobs report we had last month was well above expectations. So we've got an economy right now that seems to still be pretty strong, maybe even stronger than we thought, at a time when the Fed has said that they're really done with inflation. And they feel like they've got inflation conquered and that they're ready to switch from being hawkish to more dovish. And we saw that one rate cut. It was a 50 basis point cut. Last month, we got another Fed meeting coming up in a week or so. And so where does the Fed go, with this at this next meeting? Do they continue on their rate cutting campaign, or, are they going to pull back and say, we're going to kind of watch for a little bit because of how resilient the economy is? I will say that I think tomorrow's jobs report is going to be the most important of all these reports that we've been talking about with economic strength. So if we get another really strong jobs report, it'd be very interesting to see what the Fed does, whether or not they will continue to cut, even though the economy appears to be really strong. So those are some of the things that I'm going to be looking at as we move into the end of this week, open up November, which historically is a very, very good month for U.S. equities. And again, are we bottoming? I mean, it is October 31st. Is today the bottom, the VIX topping? We'll take a look at those charts in just a bit. Anyhow, first, what I want to do and what I always like to do is take a look at what's happened over the last week. So I've got my 6 major indices and 11 sectors all in one chart list here. I've gone back and pulled up the period for 1 week so that we can look at what's happened. Communication services leading, and a lot of that was because of a nice pop in Alphabet shares, or Google, if you will. They reported earnings just a couple of days ago, had a really nice pop. The stock's been trading up, and as a result, communication services had a pretty decent week. However, communication services, along with the internet stocks, are down a little bit today because of Meta reporting its results, which weren't bad, but the market, it's a sell-on news kind of a reaction. And so we see Meta down today. And as a result, the XLC is given back some of those gains. But still, overall, XLC for the last week has been our best performer. Right behind, though, pretty interesting, transports, and then the small caps and mid caps. So this is kind of like where I was talking about, is it a trick or is it a treat or is it a both? Because these are areas that typically do well in the fourth quarter, have shown some strength here over the past few weeks, but it seems to always be followed with more weakness. And this week we're seeing relative strength. It's not that the groups are going up. You can see the small caps actually down for the last week, mid caps down a little bit for the last week. But on a relative basis, when you see the NASDAQ, or first of all, technology down 2.85%, NASDAQ down 1.51%, and the S&P 500 down 1.49%. That's telling us a little bit about the relative performance and the fact that money is rotating back toward those small caps. But again, this back and forth rotation has been continuing. So I'd like to see a little bit more consistency and really and truly find out who the leaders are in this market. But for right now, we just have to deal with the back and forth until we see a clear leader emerge. Going through some of these charts, here's the XLC. So you can see the XLC moving up. That was the gap up we saw yesterday on Wednesday. after Google had reported earnings after the close on Tuesday. So we got a nice gap up there, but you can see we have continued to move a little bit lower off of that. Let me just make sure we got the latest here. Yeah, still down just a little bit, down 0.15%. So really not getting much follow through, and a lot of that is due to Meta. Meta down today, almost 4% on its earnings, back down to 569. I think the chart's still very constructive. I would say I'd be looking for 560, possibly down to about 540. This was the double top breakout at 540 that we haven't tested. Recent lows have been right around 560. So those are the two levels that I think are really key on Meta. And then we've got the 20-day moving average coming in between. And that right now is sitting at actually the 20 is at 576. The 50-day moving average is at 555. So we got the 50-day kind of between those two support levels that I gave you, 560 and then 540. So that's a lot of support to watch on Meta. I do think any kind of a move back down into that range is probably an opportunity to jump in to Meta on the long side, but at least for now, we can see that we are struggling the day after earnings. Here is that Alphabet Google chart where we got the gap up on Wednesday. We did come back down, start to fill the gap. Saw a little bit of strength earlier this morning, but now you can see Google right near that flat line, up just barely for the session. Volume yesterday on that big move to the upside, the big gap up, saw a very heavy volume. It was just about the heaviest volume of the year. I think this day back at the end of January 2024 may have been just a little bit higher, but nonetheless, very strong volume, really nice action to the upside. So for the first time, Google is actually starting, or I should say first time in a while, Google is actually starting to show a little bit of leadership. We'll see if that continues. All right, transportation. Wanted to show you the transportation chart because I do think this is really constructive. We've had this breakout above all these multiple tops over the course of the last year. We made the breakout in mid-October. We pulled back, but essentially holding that 20-day moving average, and we've been trading up off of it. Even though the market struggling a little bit today, transport's up. So transports are showing some really nice relative strength and resiliency, even in the face of some selling in the market. IWM small caps pulling back, but holding on to short-term support around that 219, 218 area. Make sure we got the latest here. Yeah, 219.94 now. So really nice reaction off of the recent lows today. And that's why I'm kind of watching maybe to see if we're bottoming here on the market. I'm not just talking about the S&P. I'm talking about the NASDAQ, the IWM, which tracks the small cap Russell 2000, the mid caps, all of these different areas. I think it's going to be important because we are in uptrends. And so we don't want to start printing lower lows. We'd like to kind of keep that higher lows and higher highs in play. And so right now, IWM tracking right around that 20-day moving average. Mid caps, somewhat similar. We are down a little bit below the 20, but recent price support has been right about 3,100, and we have a 50-day moving average that's sitting at 30.90. So last couple of days, we saw a reversal yesterday on this group, and then the selling has continued today. But we're just now getting down to what I would consider a key support area, right around 3,100 to maybe 30.90. 10-year Treasury yield. So the 10-year Treasury yield keeps moving up. And I'm going to check and see where we are right now, 4.29%. But here's the interesting thing. You know, when I look at the interest or when I see the yields moving higher, you know, over the last couple of years, we've been trained to think that it's moving higher because of inflation worries. I don't think that's the case this time. I think this is more about the economy strengthening than it is about inflation being a problem. And the reason I say that, I mean, I could pull up the UUP, which is the dollar index, and look at the dollar breaking out to a new 52-week high. If the 10-year Treasury yield was going up and Treasury prices were selling off, I mean, going down because of inflation concerns, the dollar shouldn't be strengthening. I mean, inflation eats right into the currency. So the fact that yields are going up with the dollar talks to me and suggests to me that Wall Street sees a strengthening economy ahead. And that makes sense because if the Fed is committing to keeping rates low or, becoming more dovish, and they believe the inflation fight is over, that, you know, if everything else is equal and all we're looking at is what the Fed is doing, if the Fed continues to lower rates and the 10-year Treasury yield moves up, what we're going to see is a big widening spread for banks between net interest income and net interest expense. And so when that happens, banks make more money, and the economy strengthens, they make more loans. So, and by making more loans, they get higher yields and ends up, sweetening their coffers as well. So what I'm seeing with rates going up and the dollar going up at the same time, setting a new high here, or at least a new high in 2024, is that it's giving me a sense of a strengthening economy rather than inflation picking back up again. And so this kind of behavior is much more conducive for growth stocks to do well. And we've been seeing the IWF. It's not been a huge straight up move or anything, but we have been seeing the IWF since early August. The IWF has been outperforming the IWD, even though it is underperforming today, mostly because of what I talked about earlier, Meta going down with earnings, also Microsoft not getting a great reaction to its earnings report. So some of the mega large cap growth companies struggling a little bit. So that's what's going to bring that IWF, IWD down. But that doesn't change the fact that we've been trending higher for the last 3 months and that we've gone higher in October to coincide with the rising dollar and rising treasury yields, which all kind of tell me the same thing. Now, I'm going to get into the VIX in just a little bit, and I think that'll give us maybe some other clues as to what we can look for in the short term. But before I do that, I want to talk about our EarningsBeats digest. It's our free newsletter. If you'd like to join us, go over to our website, earningsbeats.com, scroll down. You'll see an opportunity on the left side to subscribe to our free EarningsBeats digest. Name and email address is all it takes. I want to make sure that those of you on a mobile device can also access information on our EB digest. So on your screen, you should now see a QR code where you can scan it with your mobile device, and it'll take you to a page where you can sign up for our free EB digest there. Again, no credit card required. You can unsubscribe anytime. But the chart I wanted to show you is the one I actually used today. So normally we do Monday and Wednesday. Yesterday I was a little under the weather, so we sent out an EB digest this morning. And on this EB digest, I put this stock in here. This is Rush Street Interactive, RSI. Back on first trading day of August, this stock, if you hit this inspector button, you can go in and take a look at the actual intraday data. It opened at 1150. And since that time, off of an uptrend, we put in this cup where we got all the way back up to 1154 on an intraday basis on October 14th, but we never closed above 1150. So the candle body resistance is 1150. And this morning when I sent this out, I said if RSI, and it was about 9:15 this morning when I was looking at it, and RSI pre-market was trading at 1146. So it was literally trading 4 cents below this 1150 level. So when I wrote the article, I said, if this stock opens, if the opening number is above 1150, I think that is a very bullish signal. If it opens below 1150, then it is a less bullish signal. And many times, if you don't make the breakout on the open, a lot of times you'll see a stock pull back. Well, here in this case, this morning, this opened at 1149, 1 penny below that key resistance at 1150. And I want you to look at the intraday chart on this. This is where we opened, couldn't get through that 1150 level, and literally within the first 10 minutes, we were at 1020. We had dropped about 12 to 13% in 10 minutes. And this is part of what I like to try to teach when I'm going into like our trading room on Wednesdays. When you don't get that breakout and you get up close, you get a gap up. This is a really nice looking chart, by the way. I mean, if we go back and we look at the daily chart, this has been an uptrending chart, uptrending stock. Look at the volume trends. every time we seem to make a big move to the upside, it's coincided with really heavy volume. So I see a really bullish chart here, but my experience tells me from following a lot of these companies, when you don't get that breakout on the open, you've got to initially be a little bit more bearish. If this had opened at 1151, I would have been fine buying it. But the fact that it opened at 1149, there's no way I would buy it. Not opening just below resistance. And so anyway, this is where we came back. Now let's go back to that intraday chart. Came all the way back to 1020. Intraday got as low as 1009. Or excuse me, it says 1012. It looks like it went just a little bit below 1010. But anyway, the low says 1012. And since then, it's come roaring back. I believe ultimately this stock makes a breakout. But anyway, I thought that was an interesting chart to show because it just illustrates almost perfectly how I like to trade. Because if you don't get that breakout at the open, then I start to think, okay, maybe I can get this stock a little cheaper. And in this case, a lot cheaper when it came down. And one of the things I talk about with our members is wait until on the 10-minute chart, you see a new or a higher high go in. So here was a high, lower high, lower high, lower high. Right here at about 1040, we set a new high. Intraday 10-minute bar high. And as soon as that happened, 1040 to 11, I mean, that's almost 6%. And it occurred in a little over an hour. So trade, and then here you can see we're kind of rolling back over. So you could take your profits if you wanted. You continue to hold. I actually do like the stock longer term. I do think we're going to get a breakout in this stock eventually. But we'll see. I have to see how we close. We close back at the high of the day and above 1150. I think that would obviously be very bullish. But if we're somewhere in between, say 1150 and maybe 1010, or even over here closer to $10, that's the trading range that I think we're in right now on RSI. All right, let's keep moving. Relative strength. I wanted to show you industry groups here over the last week. Kind of surprising. The top two groups, the worst groups over the last week are gold and gold miners. And that's kind of interesting when you realize that the volatility index is going up. Because when the volatility index goes up, usually it's that fear that drives money into areas like gold and the miners, because anytime you get high volatility, you start thinking about a hedge against U.S. stocks. And obviously one of the biggest hedges is gold and so forth. So anyhow, I just wanted to point that out because I thought it looked very interesting that these two groups were the absolute worst out of 104 industry groups over the last week, even though we've seen more and more fear creeping into the market this week. And maybe that's another reason why that VIX is going to top and is not likely to break out, because with it rising, we're not seeing the usual rotation with that rising fear that we normally would see. So this is telling me it's very doubtful that the VIX makes a breakout. But we'll look at that VIX chart here in just 1 second. First, I want to show you this is the gold mining, the DJUSPM gold mining chart relative to the S&P 500. So at the very beginning of October, we had a spike in the VIX. I'm pretty sure it was the same time. And as a result, you can see the gold mining index going up and its relative strength breaking out. And I'm going to go show you the VIX now just to see if that, yeah, right here in the first week. See, right at the end of September into the first week of October, really big move in the VIX from 15 to 23. That was more than a 50% move in the VIX to the upside. And when that occurred, you can see the relative strength from the end of September into the first week of October. You can see that relative strength in gold mining shares. But look at what's going on right now. We're going straight down. This last week's been rough. Today, we were seeing a huge sell-off in the market earlier. We'll take a look at that in just a second. But while it's selling off and the VIX is soaring again, let me show you that VIX. Because here, and I'm going to give you an update, it's probably down from the high. Still 2271. The high was 2342. Look at these tops right here in September and October, right around 2342. I think this is kind of like a critical level to watch here, because if the volatility index breaks out and breaks above recent highs and is well into the 20s, a sell-off can really escalate quickly to the downside. You have to be aware of that. No matter how bullish I am, short term, you have to be aware when the volatility index is breaking out and it's in the 20s, that is normally not a time to be a hero in terms of being long the stock market. However, if you catch a top in the VIX and the VIX rolls back over, that's a perfect time to be in the stock market. I mean, right here, look at the VIX topping at 23 early September and the move down. The VIX topping at 23 second week of October and moving down. So if I pull up the S&P 500 for those periods, here was early September, the VIX topped, S&P bottomed. Early October, VIX tops, S&P bottoms. So now with the S&P coming down, the VIX is going up. VIX is back up to 23. Where do we close? I mean, if the VIX breaks out this afternoon, if we see more selling into the close today, and that VIX breaks out, we could see some additional. I mean, we could maybe go back down below that 50-day, perhaps go back down to the recent lows, which would be 5,400. I mean, I don't rule any of that out, but I need to see that breakout in the VIX because it could be that the VIX is simply up right now because of the presidential election, which will be held on Tuesday of next week. So anyway, we got some things, certainly that we've got to kind of watch here. Anytime that VIX is in the 20s, if you followed my show, you know I get nervous. I don't like a VIX in the 20s. I like a VIX in the 20s when it tops and starts coming back down, but not until then. So we do have to remain cautious here. But I just want to point out, because I won't be doing this show again until next Thursday, if we happen to top right here at this 23 and a half level and start moving back down, it is very, very likely going to print a bottom in the S&P 500. And this is a very bullish quarter. So if you get a bottom, a lot of times you want to make sure that you're in the fourth quarter because that's when the market tends to do its best. So anyhow, keep all that in mind. But gold down today, the GLD, you can see down 1.7%. One of the areas I wanted to point out that actually is pretty strong, or has been over the last week, if we go back and we switch this, you'll see the top group is actually business training and employment agencies. And I wanted to bring that up because it coincided with the ADP report yesterday. In the morning, the ADP report came out very strong. We did gap down just a bit, and then we absolutely took off. And this group is really doing well this week. So it's another sign that maybe, with jobs strengthening, that this is an area of the market that could do well for quite a while. And it's an area of the market that when it does well, I would think the overall market would do well. I mean, it's a sign of a strengthening economy in my view. So it's an area to continue watching, but I thought it was interesting that group was leading. I also find it very interesting. Let's see. If we look at the groups, look at this. Truckers are the second best industry group. Airlines are the fourth best industry group. You come down here to railroads are the 16th best industry group out of 104. So we're getting a lot of love in that transportation area that I've talked about. This group loves November. Transportation stocks love November. Industrials love November. So keep all this in mind. If that VIX tops, this is an area of the market that you certainly want to keep on your radar. Internet stocks doing pretty well. Consumer finance, insurance brokers, other financials doing well. Specialized consumer finances. So the areas that tend to lead in the fourth quarter are financials and industrials. And we're kind of seeing that along with throwing in internet, which is a high growth area. Again, if interest rates are going up because of inflation, we shouldn't be seeing any of these groups leading. And yet we do. I'd be looking for many of the defensive groups to be leading. And when you look at this, I mean, there are very, very few. Here's tobacco, which is in the XLP, consumer staples. But other than that, here's another one. That's the food retailers. But for the most part, we've got aggressive groups leading for the last week. That's not really something that makes me think we're going a lot lower. So that's why at the beginning with the Happy Halloween, I said, is this a trick, a treat, or both? It could be a trick taking us down here temporarily, and it could be a treat because buying usually at the end of October for what tends to be a strong November, could line our pockets here a little bit as well. But watch that VIX. I think the VIX is going to be the key. One last thing here I wanted to show you. This is the group. This is the mid-cap stocks for business training and employment agencies. The best stock that's in the group, I looked at all 6 of these. The one that definitely looked the best to me was Korn Ferry, KFY. So maybe keep an eye on that one. They've already reported. I think they reported in September, so you don't have to worry about an earnings report. But this one climbs back up. Here it is. If we can get back up through the 50-day and break this little downtrend, I think this is a stock that definitely could easily run back up to 76 or above. So this is one I would definitely keep in mind because of that. Just a couple of quick earnings reports that have been out recently that I really like. Netflix sitting at right now 755, but Netflix broke out with its earnings gapped up. I think that one looks good. I really like Intuitive Surgical with the big move up. We're seeing some weakness currently, but I think that's going to set up for a nice trade. MTB in the banking space, this is one that's remaining pretty close to its recent high. I see an uptrend, maybe a little cup forming here. So I wanted to point that one out. One of our portfolio stocks is Learn, which is Stride, LRN. I think they used to be called Learn something or other. Anyway, currently the name is Stride. Broke out. A lot of, I don't know what you want to call that, fake out, manipulation, something. But the stock came out with earnings, gapped right back up and broke to new highs. Let's see. There was T-Mobile. T-Mobile, I know, has looked nice. Big move ups, pulled back a little bit. I like these stocks when they pull back. I think there's less risk. So this is one to keep in mind. CBRE, another one. This was in the real estate area with a big gap up, showing a lot of relative strength, trying to hold on to support now around that 130 level. Like I mentioned, RSI, I like that one, even though we didn't quite get the breakout. I see one coming. TRUP, it's another one that gapped down this morning, had nice results, is a leader in its space, pulled back to the 20-day and threatening a breakout. I think a close above 56 would be good for TRUP. All right, anyhow, that is it for me. I do want to just let those of you know, again, if you're on mobile device, you can check out the slide on the screen. If you use your phone and scan that QR code, that'll take you to a landing page where you can find the different ways to follow us at EarningsBeats. But it's always a pleasure to come in here on Thursdays, take a 1-week look at this, see where we stand. I do think today is going to be a very interesting day because we do have that volatility index where it is. And if that VIX really starts to hum into the close today, we see 24, 25, and the market is selling off. I know we got a bullish month ahead, but seasonality takes a back seat to price action. And when you're breaking down with the VIX breaking out, you have to respect that. So anyway, that's, I think, where we stand now, but it is going to be a very interesting close today. And we got the big jobs report coming up on Friday. Apple reports tonight. Amazon reports tonight. So even though we didn't get the best reactions from Microsoft and Meta this morning, got a different batch coming out tonight, and Apple and Amazon will be the two, I think, that a lot of folks are watching. So keep an eye for that as well. So again, it's going to be kind of a spooky day, spooky night, and then we'll see what it brings in the morning. Have a great week, everybody. Happy trading.